There were information earlier before yesterday that of another debt profile that will be introduced into the market, and the DM actually came yesterday to pronounce that they'll be issuing the first 30-year bonds coming in starting from the second quarter. It was a welcome development in the market, and we saw some sell-offs particularly in the bond market. We witnessed some sell-offs in the bond market, especially for the 2028 and 2037 maturities, and that kind of made yields rise by 17 basis points overall. The essence of the 30-year introduction into the market is the government is actually looking for a means to raise low-cost funds. So the purpose of the 30-year bond is to actually involve long-term investors into the market, to also help stimulate the domestic capital market, and also help reduce the refinancing risk of the government.
Okay, let's move over now to the T-bills markets this week. Just briefly give us a summary of how the market traded and the rates that we saw. Okay,
overall, we will say that the T-bills market was characterized with mixed sentiment. Even though there was 440 billion, market opened with 440 billion liquidity on Monday, we saw some buying interest, especially for the short and medium-term maturities, especially for the May, June, July, September, and October maturities. And we saw yields drop slightly across board for the May, June, and July maturities. But up until today, we also saw some buying interest, especially for the 26 maturity, which initially opened at 12% to close at 10.75%, and then the 16.5 maturity, which opened at 11.6% to close at 11.15%. So prior to now, we say it was an overall mixed sentiment up until today, where we saw more buying interest. Now, but major activities took place for basically on the short and medium-term maturities.
Okay.